The coronavirus is having a very bad outcome on people's lives, the economy, and the health all around the globe. Today, I want to sum up what are the most important investors doing, saying, and expecting from now on. Today, I want to sum up what are the most important investors doing, saying, and expecting from now on. Plus, since I live near Milan, Italy, I'll give you my perspective of what's happening and my plans on investing. If you haven't subscribed to the channel yet, make sure to do that. Leave a like since we just started out, and let's get into the video. I want to start with Warren Buffett. He has no doubt that it's a very bad situation and he is worried of how the virus spreads fast and easily. Last week, he said he was still going to the office for work, but he opened to the possibility of working from home. Since the situation strongly worsened in the last week, I think that moment is about to come, both for him and Charlie Munger that are very old. He's also worried for his investment in Occidental Petroleum, which is down significantly due to the economic slowdown and the pricing war between Russia and Saudi Arabia on oil. But on the other side, he has $128 billion to allocate in the market, so I think we can expect big purchases announced in the next SEC filing from Berkshire Hathaway. He showed interest in the banks, which he said they are in a better situations than other businesses. The next investor I want to cover is Carl Icahn. He said that he already felt bearish, so he was already somehow hedged. He's been very critical of companies' policies to buy back stocks. He said too many companies overborrowed and now they're at risk. He even showed some concerns about what will happen on Main Street because he said too many people bought ETFs without knowing what they were buying, which could drive people to further selling panic. Mark Cuban, which is also the owner of the Dallas Mavericks, has come out as well. He said on CNBC that he is personally confused and scared. He also said that no matter coronavirus, he's a long-term bull. He said he bought into Live Nation and Twitter. He also said to his players of the Dallas Mavericks to stay by themselves. But the most complete comment came from Bill Ackman. He said that by doing the numbers, the epidemic will reach massive numbers because every infected infects 2.5 people on average. Because of people infected with no symptoms are still extremely infective. He said people strongly underestimated the virus, and I can say it's true, and that by doing the math, it will spread everywhere and 50% of the world population will be infected. Since February 26, all the employees of his fund, Berkshire Square Capital, have been working from home, and already 2 out of 50 have showed some symptoms. He also told not to misbehave and to follow strict guidelines, and from my personal perspective, he's perfectly right. He said that the crisis starts from the bottom all the way to the top, from the guy with an unstable job that loses his position to the business owner that defaults on his debt. Since we'll have to wait for the vaccine for 18 months by estimates, he said there's no business in the world that can survive this period without revenue. He made the example of Hilton, where he had invested in. This company goes from having 80% of rooms occupied to zero. It can survive, just like every other hotel chain. So he said that the only answer is to shut down everything except necessary services for 30 days in order to solve the problem. He also said that Boeing will not survive without government bailout. And probably airline companies are getting closer to that same situations also because they borrowed money in order to do buybacks. Mohamed ElErian, chief economic advisor at Allianz, said that we are already in a global recession because such a situation destroys both demand and supply at the same time. He also commented the Fed's moves to bring liquidity to the market as necessary because otherwise we wouldn't be talking about a recession but about a deep crisis. He said that the major help will be needed because there are vulnerable people with no resources. Later, he said that investors should focus on companies with strong balance sheets and very little debt because some of the companies with high debt are not going to survive this. For those of you that invest in real estate, CNBC also interviewed Aaron Kerman of Listings Impossible in Los Angeles, and he said everything is shut down. In Italy, it's happening the same, so real estate might suffer great devaluations as well. New York University's Nouriel Rubini said on Yahoo Finance that what's ahead of us is not a liquidity crisis but a debt crisis because companies have been borrowing so much in the last years that some of them will go bankrupt for sure, following some of the rhetoric made by ElErian. He later said that the $1,000 stimulus is extremely necessary or even more to selected number of people in need unless we don't want people assaulting the stores. Scott Minerd, chief investment officer at Guggenheim, said to look at what's happening in the real economy, which is fluttering due to the shutdown of many activities. He had also put on the table a TARP-style bailout for struggling businesses. He said it was a money-making machine for the tax collector because as an exchange for the bailout, it had equity in the companies. He was also worried at debt piling up in many emerging and struggling countries from Indonesia to Brazil and Eastern Europe. Ray Dalio didn't talk about it, but Bloomberg reported that he placed a $14 billion short on European stocks. Chamath Palihapitiya, Social Capital CEO, came out on CNBC as well. He said that in order to have a bull market again, they should test basically everybody in order to solve the issue earlier. He was extremely mad at hedge funds that are highly leveraged and, according to him, are causing these wild swings in the market. He said that some of these hedge funds are leveraged even 15 times the principal. He also said it's unfair to bail out companies and individuals because they're greedy. In the end, Howard Marks spoke on TD Ameritrade Network and said that even if the pandemic gets solved, there are many dangers. For example, the shareholders in the companies that will need to get bailed out will lose their money because the government will become a shareholder and others' positions will be diluted. My personal take is that we haven't seen the worst yet. From a general perspective, what I can tell you is to do your best to isolate yourself. When these dangers present themselves, the first thing you unconsciously think is that, okay, it's close, but it's not going to happen to me, and it's not going to touch me in any sort of way. I can tell you it will. One of my teachers in my old school just died a few days ago. A friend of mine said that the father of one of his friends died as well, and we haven't seen the peak yet. So act responsibly if you don't want it to happen to you or one of your loved ones. Plus, even though mortality rate is low, many people need to get recovered, and if hospitals run out of medical supply, they'll have to choose, so mortality will rise. So do your part, stay at home, don't use excuses to go out. I'm looking forward to buy high yield ETFs, but I think the market will further drop in the coming weeks, so I'll wait. I especially like the Lixor Stocks Europe Select Dividend 30. This is it for today. Thanks for watching. Make sure to subscribe to the channel if you haven't done it yet and like the video. because it's very important since we just started out. If you want to support us, you can do it either through PayPal or by doing your regular shopping on Amazon after clicking one of the links down below. I wish you all a good day and see you the next time.